Welcome to the 38th installment in Trading Strategy Guide's Trading Education series. Today we're going to look at what, in my opinion, is one of the most important indicators available. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education series. In today's video, we're going to discuss how to master the ATR indicator, which in my opinion is one of the most valuable indicators in your trading toolbox. Let me start this video by admitting my fallibility to you guys. Yeah, I'm not perfect. Until I started doing research for this video, I thought the ATR was simply the average of the length of the last X candles. But I've discovered that it's somewhat more complex than that. The ATR also takes into account the difference between the candle closing price versus both the high and the low prices of the candle. So the wickier the candles, the higher the ATR. Since this video series is about practical instruction, I won't fill it up with historical and theoretical information. I know some of you are like me and you want to know every single detail that can be known about something, but I also know that many of you don't. So if you want more details about the history or calculation of the ATR, I suggest you Google the ATR indicator and you'll find out everything you never wanted to know about it. The ATR, or average true range, is a measure of the volatility of a stock, commodity, or currency pair. The volatility of a market is simply the amount of movement of that market. A highly volatile market is one that moves around a lot, and the ATR gives us a relative measurement of that over a given time. The number of periods typically used for the ATR is 14. That, of course, represents almost 3 weeks on the daily chart for most markets, with the notable exception of cryptocurrencies that trade over the weekend when most everything else is shut down. So, why do I find the ATR to be one of the most valuable indicators in my toolbox? Well, it's kind of like a Swiss Army knife. It has a lot of functions, including picking targets for your market, picking stops for your market, identifying when a market is consolidating, and identifying when a market trend may be winding down. Have you ever started using a new strategy that suggests, say, a 70 pip target on the daily Euro USD? Then you find you'd like to expand that strategy to other currency pairs. As you can see, a 70 pip target is roughly equivalent to the current ATR on the daily chart, but it would be way too big for, say, the Euro Swiss franc, which shows an ATR currently of around 43 pips, or if you use that same 70 pip target on the Great British Pound New Zealand, which currently shows about a 173 pip ATR, I think you would find out that you are wasting a lot of the movement that you're trying to capture with the Great British Pound New Zealand. So the ATR allows you to adjust your targets for each currency pair or commodity to allow for the movement of those particular markets without having to guess. You can also use the ATR to adjust targets for smaller time frame charts as well. And of course, the same goes for stops. You can use the ATR to adjust the size of your stop losses to allow for the volatility of the market you're trading. If you follow my Trading Picks videos, you know that I use the ATR for targeting and stop losses all the time. That way I don't have to do any guesswork on stops and targets, no matter what market that I'm trading. And again, if you follow my Trading Picks videos, you'll know I use the ATR to indicate to me whether a pattern is a real consolidation or not. Sometimes it takes a bit for the volatility to drop off in a consolidation pattern, but once the ATR starts to drop, I start taking the pattern seriously as a potential trade setup. Combined with the volume indicator, this is a powerful sign that interest in the consolidation is waning and suggests you watch for an explosion out of the consolidation. And lastly, when the market is trending, the volatility will typically remain high. When it starts to consolidate, whether it's rolling over or just taking a breath, a reduction in volatility will give you a warning and an opportunity to take an additional position or close an open position for profit before the market makes a new move. Looking back at the Euro USD daily chart that we were looking at earlier, you can see that the volatility shot up right here while that particular uptrend happened. Then we started having a consolidation, a pullback, and then it just kind of went sideways for a little ways. And you can see that during that time the volatility dropped off until it finally broke out of that consolidation right in here somewhere. And you can see the volatility popped a little bit right there. But then it kind of kept going sideways as this pushed up, then pulled back and pushed up, and so on. We don't know what's going to happen yet since this is actually a current chart. But you can see that the volatility is kind of dropping off here with the exception of this little spike right here. So it's possible that we're looking at a reversal about to happen here on this Euro USD daily chart. Of course, you will want to confirm that with additional indicators and price action. I highly recommend that you add the ATR indicator to your trading toolbox and discover all of its ins and outs. It has done a lot to improve my trading over the years, and I believe it could do the same for you. And that's it for today's video. Next week, we'll be looking at mastering the MACD indicator. Come back Friday for my strategy of the week and next Monday for my trade picks. And don't miss the next installment of the Trading Education Series next Wednesday when we'll discuss the MACD indicator. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below, subscribe and hit the bell if you want to be notified of our videos in the future. I want to wish everyone a happy new year. We're finally coming to an end of this weird year, 2020. I think 2021 looks like it could be awesome. Remember, I suggest that you not take any new trades for the next week or so, as the market will still be very thin and whippy. All right, guys, have a great Wednesday, and I'll see you on Friday.